First Republic Bank is the next bank on the verge of collapse unless they can raise money or get taken over quickly. Now, if you're unfamiliar with First Republic Bank, as of December 31st, 2022, they were the 14th largest bank in the United States with about $212 billion in assets. To put that in perspective, on December 31st, 2022, Silicon Valley Bank was the 16th largest bank in the United States with about $209 billion in assets. So First Republic Bank was slightly larger than Silicon Valley Bank in December of 2022. And what we've been seeing happen with First Republic Bank is that over the last 48 hours, their stock has been crashing hard. Yesterday, on Tuesday, the First Republic Bank stock fell by around 50%. Today, the stock fell by another 29%. And the reason why their stock is crashing so hard is because on Monday, First Republic Bank made their earnings statement and they released how much money they lost after the Silicon Valley Bank collapse. Because when Silicon Valley Bank collapsed in March, we saw a lot of people panic and they pulled their cash out of their smaller banks and moved this money to bigger banks. And we didn't know to what extent this was happening, but on Monday, First Republic Bank made it clear. And what they said was that in March, 40% of the deposits of the cash in First Republic Bank was pulled out and taken other places. And when investors saw this, they naturally got worried because our banking system is not designed for people to pull their money out of banks because banks need your deposits to continue lending, to continue their operations, and to continue making money. And so when people pull their money out of banks, the bank can fail. So when investors saw that First Republic Bank saw 40% of their deposits leave, they started to sell off the stock. And this then created essentially a self-fulfilling prophecy because first, we had this banking crisis which caused people to do a run on the banks and pull their money out of banks like First Republic. This then caused the stock price of First Republic to fall. Now, because the stock price of First Republic is falling so hard, it's creating more panic, more fear, causing an even bigger bank run because now people are seeing what's happening with the stock and now they're running back to First Republic Bank. That way they can pull whatever cash they have out just in case of a bank failure. So that's where now First Republic Bank is becoming much more desperate to raise money. Now, this is where things get really interesting because on Monday, 48 hours ago, First Republic Bank said that they essentially wanted to raise somewhere between $50 to $100 billion. Today, their stock is worth $1 billion. Their stock today is trading for right around $5 a share, which values the company at right around $1 billion, meaning First Republic Bank, this company, the bank, is currently valued at its stock price today at $1 billion. And 6 months ago, the stock price was trading for about $150 a share. So we saw the stock price fall by about 96% over the last 6 months. They're today valued at $1 billion on the stock market, and on Monday they wanted to raise $100 billion. And you can start to see why they're struggling now to raise money. And this is where CNBC reported a very interesting plan on how they're going to go out or how they're going to try to raise money. And we did break this down in Market Briefs, which is why if you haven't joined Market Briefs, my free financial newsletter, where every day my team's breaking down what's happening in things like the banking sector, the housing market, the stock market, crypto, the global economy, and everything in between. It's a super fun and easy to read email. So if you haven't joined Market Briefs yet, for free, I'll put the link to how you can join down in the description below. But this is where what CNBC reported today on Wednesday was that the First Republic Bank advisors are telling First Republic to go back to the banks that essentially bailed out First Republic in March and ask them for more money. Now, what that means is in March, when the bank runs started, First Republic Bank was really struggling. And then they turned to banks like JP Morgan Chase Bank and Bank of America, and they were able to raise money from these banks. They raised about $30 billion from these banks to stay operational. Now, what the advisors are saying to First Republic Bank is go back to these banks like JP Morgan Chase Bank, Bank of America, and tell them to buy some of your underwater assets for an above market value price. So what does that mean? Well, First Republic Bank, like many other banks, are sitting on underwater assets. What are these assets? Bonds. What are bonds? Loans. So First Republic Bank is sitting on some underwater loans like many other banks. And the reason why they're now underwater is because over the last 12 months, the Federal Reserve Bank has been working to raise interest rates. When you raise interest rates, it makes the value of a lot of bonds, things like treasury bonds, go down. So First Republic Bank bought up these bonds at a certain price. When interest rates go up, the interest rate on the bond goes up, but it causes the price of the bond to go down. So now First Republic Bank is sitting on a huge share of these bonds that are now underwater that they cannot sell when they need money because, well, they would lose money if they sold these bonds, so they can't sell them. That puts them in a very tight position because now they need money, but they can't sell off their assets because if they sold off their assets, they would need to pay even more money. This is where now the First Republic Bank advisors are saying, okay, take these underwater assets that you have, that you're losing money on, that you can't sell to anybody else, take it back to JP Morgan Chase Bank, take it back to Bank of America, take it back to these other banks and say, okay, look, how about you buy these underwater assets for an above market value price? Essentially, pay us money for nothing. And the reasoning for that is if you don't pay us the money for this, we're going to collapse. And now you might be saying, well, why does that matter? I mean, why would a private bank like Chase or Bank of America want to save another bank? Well, this is where now, what happens if a bank fails? Because right now, previously, the government has essentially guaranteed all deposits. The government has said that they don't want to bail out a bank. That means they don't want to bail out the investors, the shareholders, the people that own stock in the bank. But the government has opened up the door to save the depositors, meaning if you save $1 million in your savings account at a bank, and then the bank goes under, FDIC insurance will protect you up to $250,000. But then after the Silicon Valley Bank crash happened, the government came out with the Fed and FDIC and essentially said that they will protect you up to infinity, meaning you'll get all of your money back no matter how much money you had in the bank. Now, where would this money come from? Because if the government is going to pay this money, that means that would cause inflation because they would have to print that money. But the government said essentially that they would do a special assessment on private banks, meaning Chase Bank, Bank of America. They would charge them a fee, and then that fee would then pay for the FDIC insurance payments. So if you saved $1 million, the bank went under, FDIC insurance should protect you up to the first $250,000. The other $750,000 is supposedly going to be given out by a fee assessed on JP Morgan Chase Bank and Bank of America and a bunch of other private banks. So the leverage here, according to these advisors and CNBC, is First Republic can go to Chase Bank and Bank of America and say, hey, look, if you don't give us money for these underwater assets, then you are going to be forced to pay for our lost deposits. So it is you have to pay if we lose and you have to pay if we win type of situation. And so this is the negotiating that First Republic Bank is going to be trying to do. Now, if First Republic Bank can't negotiate a deal and they can't raise money, then they could potentially be taken over by the FDIC. That's what happened to Signature Valley Bank. That's what happened to Silicon Valley Bank and Signature Bank, getting the names confused. And that's where FDIC would then have to pay out even more money because FDIC insurance protects your money up to $250,000, but it doesn't have enough money to insure all depositors. That's why they're backed by the full faith and credit of the United States government. Meaning if a bank fails, FDIC insurance would pay out all of your money up to $250,000. But if they don't have all that money, they would go to the government and the government would then give that money to the FDIC. But the government doesn't have boatloads of money just sitting there because the government is also underwater. I mean, they have almost $32 trillion worth of national debt. They're running a very large national deficit, meaning they're spending more money than what they're bringing in. So if the government has to pay more money to FDIC, that means the government would have to borrow more money from the Federal Reserve Bank, which means the Fed would have to then print more money, which means more inflation. So this is the Federal Reserve Bank and First Republic Bank essentially being stuck between a rock and a hard place, because if First Republic Bank gets taken over, that means the private banks would have to essentially lose money to do a private bailout of the bank. If the private banks don't bail out First Republic Bank, then FDIC and the government and the private banks would then have to bail out First Republic Bank, and that's a tough situation that we're in. And what's interesting, going back to what I was saying just a minute ago, is how fast things progressed, because on Monday, 48 hours ago, First Republic Bank laid out a plan of how they were going to stay in business. And what their plan was to first cut costs. They were going to lay off 20 to 25% of their workforce, and they were going to sell off some of their real estate, and then they wanted to raise $50 to $100 billion. Well, now, because of how fast things progressed, that's not going to cut it fast enough, and they've become now in this tough situation where they need to raise money quickly. That way they can continue to stay operational, or they're going to be seized by the FDIC. And this is where now we don't know what's going to happen. I'll be keeping you posted on market briefs, which is why if you haven't joined yet, make sure you do so, but I'll also be trying to keep you posted here. So those are the options for First Republic Bank, and we'll really see where this goes. And it goes to show you that the banking issues that we have been facing are not out of the water yet. Looks like we're going to continue to be seeing these banking issues, and the higher interest rates have yet to really shown their true colors and their true effect in our economy. So this is where you want to stay tuned, but also be prepared. That way you can capitalize on opportunities that might come your way.